silver versus digital gold. That's the war nobody on Wall Street wants to talk about openly. Not because the answer is complicated, but because the answer is inconvenient for a lot of very powerful people who have spent the last decade telling you that physical assets are relics and digital is the future. But right now, in 2025, with the dollar bleeding purchasing power every single month, with banks tightening, with governments quietly building the infrastructure for programmable money, physical assets are winning the confidence war. And by the end of this video, you are going to understand exactly why. Let me be direct with you from the first 30 seconds. This is not a video about which asset has better returns on a spreadsheet. This is a video about which asset survives when the spreadsheet stops mattering. Because there is a scenario, and it is not a fringe scenario anymore, where the system that all of those spreadsheets depend on comes under serious, sustained pressure. And in that scenario, the confidence war is won not by the asset with the best code, but by the asset that functions when the grid goes dark. I've been reading your comments on recession warnings, and something is shifting in the tone. A few months ago, the pushback was mostly from Bitcoin maximalists telling me I didn't understand technology. Now the questions are different. People are asking about CBDCs, about the digital trail, about what happens when the government decides your money has conditions attached to it. That's not paranoia. That's pattern recognition. And everything I'm going to show you today connects directly back to that concern. So hold that thought, because we're going to come back to it. Let's go back 5,000 years. Because the confidence war didn't start with Satoshi Nakamoto's white paper. It started in ancient Rome. The Roman denarius was silver, not a promise of silver, not a digital representation of silver. It was silver, physical, tangible, holdable. And for centuries, it was the most trusted currency the ancient world had ever produced. Roman soldiers trusted it. Merchants across 3 continents accepted it without question. Emperors built the largest empire in Western history on the credibility of that coin. And then, just like every empire that has ever existed, the rulers got greedy. They started mixing copper into the silver, reducing the metal content while telling the public the coin was still worth the same. They were doing quantitative easing with a chisel. And the result was exactly what you'd expect. Inflation, social unrest, collapse. Now move forward to Britain, the British pound sterling. Most people hear the word sterling and think it means reliable, trustworthy, solid. And it does mean all of those things, but only because of what it originally referred to. Sterling literally meant a pound of silver. That was the asset. The currency derived its credibility from the physical metal backing it. And for centuries, the British financial system was the most dominant on Earth, not because of military power alone, but because the world trusted the asset underneath the currency. Now I want to take you to Germany in 1923, because this is where the history lesson stops being academic and starts being a warning that should make every single person watching this video sit up straight. Weimar Germany is the textbook hyperinflation case. Paper marks became so worthless that people were burning them for heat, not as a metaphor, literally as fuel, because the wood cost more than the currency could buy. Wheelbarrows of cash for a loaf of bread, a lifetime of savings wiped out in months. And in the middle of that chaos, something critical happened with silver. People who held physical silver, actual coins, actual bars, could still trade, could still eat, could still navigate a world where the official currency had become a joke. Not because silver was magic, because silver was real. You could hold it, weigh it, hand it to a farmer, and walk away with food. No bank required, no government guarantee, no third party standing in the middle, just metal and trust. The oldest economic relationship in human history. And that relationship held when everything else around it was burning. Here is the test I want you to apply to every asset you're considering right now. I call it the zero test. Has this asset ever gone to zero? Bitcoin has crashed more than 80% multiple times in its 15-year history. 80%. And it has never, not once, been tested in a true multi-year Great Depression. It has never lived through a world where the internet stops working, where power grids fail for weeks, where social trust collapses so completely that people stop agreeing on what anything is worth. Silver has been through all of that, every version of it, every century of it. For 5,000 years of recorded human economic history, silver has never gone to zero, not once. Let that land. Drop a comment below. Tell me where you're watching from. Because I want to know how many of you are in cities where you can already feel it, where groceries are up, rent is impossible, and the paycheck that used to cover everything now covers maybe 60%. Tell me where you're watching from, because what comes next is going to hit differently depending on where you are. Now let's talk about Bitcoin. And I want to be genuinely fair here, because the confidence war requires an honest analysis of both sides, not a one-sided takedown. Bitcoin's core argument is scarcity. 21 million coins. That's the hard cap. No central bank can print more. No government can inflate it away. The supply ceiling is mathematically enforced. And in a world where every fiat currency is being debased in real time, that argument is genuinely powerful. I understand why it resonates. I understand why millions of intelligent people have allocated serious money to it. But here is the problem. And this is the problem that the confidence war framework exposes completely. In every major market crisis of Bitcoin's 15-year existence, it has behaved like a risk-on asset. When fear enters the market, when the S&P 500 drops, when institutional money runs for cover, Bitcoin doesn't hold. It crashes, sometimes harder than equities. In March 2020, when COVID fear swept global markets, Bitcoin lost more than 50% of its value in days. The stock market crashed. And Bitcoin crashed with it. That is not a confidence war asset. That is a speculative asset behaving like a leveraged technology bet. And there is a massive difference between those two things. Silver doesn't behave that way. Silver has what I call a physical floor. And the reason it has a physical floor, the reason it cannot crash to zero the way a digital asset theoretically can, is that silver is not only a financial instrument, it is a critical industrial commodity, and you cannot separate those two identities. Every solar panel being installed right now, in California, in Texas, in Germany, in the manufacturing corridors of China, contains silver. Every semiconductor in your smartphone, every advanced battery system moving towards solid-state technology, every medical device in every hospital. Silver is inside all of it. That industrial demand creates a value floor that exists completely independently of what Wall Street thinks, what Jerome Powell says, or what the price of Bitcoin does on any given Tuesday. This is the utility gap. And it is the single argument that digital gold simply cannot answer in the context of the confidence war. If the financial system resets, if we wake up one morning and the banks are closed and the dollar has been redenominated and people are questioning the value of everything, the world still needs silver, because the world still needs solar panels, still needs semiconductors, still needs the physical infrastructure of a functioning modern civilization. Bitcoin in that same scenario requires a functioning internet, a functioning power grid, and a level of institutional social trust that, in a hard collapse, disappears almost immediately. China understands this at the national strategic level. China has been stockpiling silver, not as a financial hedge in the way retail investors think about it, but as an industrial input for their manufacturing dominance. Their solar capacity is the largest in the world. Their electronics manufacturing is the largest in the world. They are treating silver as a national strategic resource. When the world's second largest economy categorizes something as a strategic asset, that is not a coincidence. That is a signal worth paying attention to. Samsung recently made a significant shift towards solid-state battery technology. Solid-state batteries use considerably more silver than traditional lithium-ion batteries. This is not a footnote. This is a demand shock developing in slow motion. The industrial appetite for silver is growing at the exact same moment that above-ground silver supply is tightening. And the financial market has not fully priced this convergence yet. The gap between what silver is actually worth as an industrial input and what it is currently trading at on the spot market, that is the asymmetric opportunity that is hiding in plain sight while everyone is watching the Bitcoin price ticker. The confidence war has a second front, and this one is the front that keeps a lot of people up at night. It's not about returns. It's not about industrial demand. It's about control, about who gets to decide whether your wealth works when you need it most. Walk through this scenario carefully. Tomorrow morning, your government announces the formal rollout of a central bank digital currency, a CBDC. Your existing bank deposits will be migrated over the next 18 months. And this new digital currency comes with programmable conditions. The government can restrict where you spend it, what you spend it on, and under certain circumstances, whether you can spend it at all. This is not a conspiracy theory. This is not speculation. China already has a live version of this with the digital yuan. The European Central Bank is actively building the digital euro. The Federal Reserve has been researching a digital dollar for years. The architecture is being constructed right now in real time, while most people are focused on their Netflix queue. In that world, what happens to Bitcoin? The maximalist answer is that Bitcoin is the escape hatch, that because it runs on a decentralized network, no government can shut it down. And technically, at the network level, that is partially true. The Bitcoin protocol itself is extremely difficult to kill directly. But here's the move that Bitcoin advocates are not accounting for. Governments do not need to kill the network. They just have to regulate every point where Bitcoin touches the legal financial system. Every exchange, every payment processor, every bank account, every on-ramp and off-ramp brought under CBDC compliance requirements. And suddenly, your Bitcoin is an island. You can hold it. You just cannot convert it to anything spendable without triggering exactly the kind of regulatory scrutiny you were trying to avoid. The escape hatch becomes a trapdoor. Silver has no on-ramp to regulate. Silver has no exchange that a government can compel into compliance. Silver has no private key that can be subpoenaed. No blockchain record of the transaction, no digital trail for a surveillance algorithm to follow. A 1-ounce silver coin has been passing between human hands for thousands of years, completely outside every system of institutional control that has ever existed. And it will keep doing that, long after every cryptocurrency exchange in the world has been fully absorbed into the CBDC regulatory framework. This is what financial professionals call counterparty risk, the risk that the other party in your transaction, the other party your wealth depends on, fails. With Bitcoin on an exchange, your counterparties include the exchange platform itself, the wallet software, your internet service provider, THE power grid keeping your devices running, and the broader social consensus that Bitcoin has value at all. That is a long chain, and every single link is a point of failure that is outside your control. With physical silver, the chain is just you. FTX happened, Mt. Gox happened, Celsius happened. Billions of dollars in digital wealth gone. Not because the mathematics of the blockchain failed, because the humans operating the systems around the blockchain failed. Silver doesn't have humans in the middle. Silver is the asset. The asset is in your hand, full stop. If you hold it, you own it. No exchange can be hacked. No company can go bankrupt and take your position with it. No password to forget. No two-factor authentication standing between you and your own wealth in a crisis. I've been watching something develop in the comments on Recession Warnings that I think is one of the most important signals of where we actually are right now economically. Families are checking out, not in a defeated way, in a deliberate, strategic way. Building community gardens, learning food preservation, exploring local barter systems, buying land outside cities, looking for ways to operate at the community level, outside the mainstream financial grid. And a lot of them are asking the same question. What do we use as a medium of exchange when we're running parallel to the system rather than inside it? The answer has been the same for 5,000 years. Small silver coins are the historical backbone of local community-level trade, precisely because they are divisible, portable, durable, and universally recognized without any institutional infrastructure required to validate them. A silver dime, minted before 1965, contains approximately 0.72 ounces of silver. At current prices, that dime carries roughly $2 of intrinsic metal value. Regardless of what the Federal Reserve does tomorrow, regardless of whether the FDIC fails next quarter, regardless of what Jerome Powell says at the next press conference, that value exists because of what the coin is physically made of, not because of what any institution says it's worth. That is monetary sovereignty at the individual level. And in a world accelerating toward programmable money and financial surveillance, that individual sovereignty is becoming more valuable every single day. Now, I want to be precise about something, because the confidence war is not won by going to extremes. I'm not telling you to liquidate everything and fill a safe with silver bars. That is not a strategy. That is a reaction. Intelligent hedging across the range of possible futures requires a framework. And the framework I want to leave you with is what I call the hybrid hedge. Silver is your survival layer. It is the foundation, the asset that functions when everything else breaks. It has 5,000 years of monetary precedent, a physical floor built on industrial necessity, and an immunity to the kind of institutional and technological failure that can wipe out digital assets overnight. In a recession, in a currency crisis, in a hard collapse, silver is the floor that does not give way. It is the asset you hold because the world will still need it regardless of which way the political or financial winds blow. Bitcoin is your speculation layer. It is the asymmetric bet on a world where the existing financial system does not fully collapse but does fundamentally transform. If the dollar loses reserve currency status, but civilization continues, if we move into a multipolar monetary world where decentralized digital assets fill the trust gap left by weakening fiat, a Bitcoin could be an extraordinary store of value in that transition. That is a real scenario. It deserves a position in a serious hedge portfolio, but it is a growth bet, not a survival asset, and you need to size it accordingly, with money you can afford to have locked, illiquid, or heavily discounted at exactly the moment you might need it most. The confidence war is ultimately a test of one thing, which assets hold their credibility when the institutions that normally create credibility are themselves under threat, when the Fed is under political pressure, when the banking system is stressed, when governments are moving toward financial surveillance and control. In that environment, in the specific environment we are living through right now in 2025, physical assets are winning the confidence war, not because digital is bad, but because physical is sovereign. Because physical requires no password, no power grid, no social consensus, no institutional intermediary to hold its value. Silver versus digital gold. 5,000 years of monetary history versus 15 years of price history. An asset the world physically needs to build its future versus an asset the world needs to agree to value. In a world of high confidence, high trust, and functioning institutions, that agreement can hold. But in a confidence war, in the exact kind of slow-motion economic unraveling that Recession Warnings has been tracking for you, the agreement is precisely what is breaking down. Don't build your family's financial foundation on a software update. Don't make physical survival dependent on infrastructure that requires electricity, institutional trust, and regulatory tolerance to function. Your foundation should be something you can hold in your hand, something with no counterparty, something that farmers in Weimar Germany accepted when paper money was wallpaper, something that Roman soldiers trusted before your nation existed, something that will still be recognized as valuable long after every central bank in the world has launched its digital currency and every cryptocurrency exchange has been brought under compliance. Here's the question I want you to sit with. If the banks close tomorrow, not for a weekend, not for a banking holiday, but for 30 days, which asset would you want in your safe? Not in your exchange account, not in your brokerage, in your safe, in your home, under your physical control. Your answer to that question is your real asset allocation strategy. Everything else is theory. This is Recession Warnings. And the one thing this channel stands for above everything else is this. The time to prepare is before the crisis arrives, not during it. The people who emerge from economic collapses with their families intact are never the ones who panicked and reacted. They are the ones who saw it coming, built their foundation quietly, and held their position when everyone around them was running. The confidence war is already underway. Physical assets are already winning it. The only question is which side of that war you're going to be on. If this video shifted something for you, share it with one person who needs to hear it. And if you haven't subscribed to Recession Warnings yet, now is the time, because the signals are accelerating. And you do not want to be the last one to see what's coming.